now that we're recording, we can officially start. I've got Mike with AssumeList. We're going to be talking about assumable loans. We've got an expert on getting that second loan that one that everyone has a question on. Okay, we've got now this identified property, but how do we get the second loan? Because now it's becoming an issue. Mike, who do we have with us, buddy?
All right. Hey, Tristan, thanks for the introduction. So those who don't know me, Mike Lorino with AssumeList, AssumeList.com. So we have been doing a number of webinars with Tristan and the LabCoat agents community, specifically focused on assumable mortgages and how assumable mortgages work. What are the rules surrounding them, how to take advantage of them for your clients. Today, we're going to do something really special. So I've been getting a lot of feedback from agents across the community. Mike, assumable mortgages are great. I know that they exist. I understand how they work. My problem is I've got clients who just don't have the cash to cover the down payment. What solutions exist to help me and my clients overcome this challenge? Because as we know, interest rates are remaining high, and yet appreciation rates, or the equity that homeowners have in their properties, are going up as well. So the longer a homeowner owns the home, the more equity they have in it, which means the greater that cash gap becomes. So one of the things we're going to talk about today is second mortgages and how your clients can take advantage of a second mortgage in their pursuit to assume an existing loan. So with me today, I've got David Piatek. David
Hi, everybody.
is a licensed loan officer with Waterman Bank. David and I have known each other for a number of years. He is an Army veteran. So through our military circles, of course, me being a retired Marine Corps officer, I kind of keep things in the family with people I trust. And there's no better partner that I can think of when it comes to VA loans and assumable mortgages and second mortgages than David Piatek, who is, I would put him up against any lender nationwide. He is one of the most knowledgeable loan officers in the country. He is the guy that gets invited to the military installations to do the retirement and transition seminars to teach veterans about their veteran benefits. That is extremely difficult to do. Most agents do not get invited, or most lenders do not get invited to teach these courses to actively serving Marines on military installations as part of those transition seminars. And yet he has cracked the code and is one of those unique individuals because of his extensive knowledge, experience, and his really focus on training to educate those in the industry. So we have David here today. So
thank you, Mike.
Thank you. David, do a quick intro. Yep, go ahead.
For that. Yeah, I'm excited to be here and explain a lot of this stuff because it is confusing for a lot of people, from agents to consumers, and lenders don't even realize what they can do. So like, we're going to break all of that down today to really empower everybody to take those next steps and actually get these clients under contract, so you guys know how it works.
I like that, man. I just put in the link for your YouTube channel. I was just checking it out.
I appreciate it.
As Mike was doing that awesome intro, I'm like,
that's a lot of good info.
Pretty good intro. All right, so guys, with finding the assumable loan, now that AssumeList makes it a lot easier for us in different parts of the country, that's not a problem. The challenge I find are two things, and you tell me if I'm wrong, Dave. Number one is educating the real estate agent and the public. So I'm putting that in one bucket. Number two is, now that they're educated, how the hell do they make the difference up between what they bought it and what it's worth now? That's a big challenge, man.
Right. It's huge. And the myth that still exists today is that you can't get a second mortgage on an assumable loan. And the reason why that exists is because when you, and this is a really technicality, when you purchase a property with a VA loan or FHA loan, you can't get a second mortgage. That is true. But you are not buying a house technically when you're assuming a mortgage. That's why you're allowed to get a second mortgage, because you're assuming a mortgage that's going to be yours. And then you're actually then able to get that second mortgage. And so there's a lot of different options that exist out there. for folks to be able to assume these mortgages. And like for our end, we can actually go up to 95% loan to value on these products.
Wow.
So yeah, and I know, Mike and I were talking the other day because, I mean, Mike, you want to touch on like, you touched on like why there's a big gap, right? But there was also an issue that servicers, when this all first started, they weren't accepting second mortgages from companies because, it gets technical, but Mike knows about this, like the notice of value. So you really couldn't get a second mortgage over the original purchase price of a property. Well, that's kind of crazy. It negates anything that you're trying to do with these second mortgages. But we talked about it. What, Mike, which companies have opened up second mortgages?
Let's talk about that real quick. So
yeah,
most people, when they think of taking out a second mortgage, there has been some issues with servicers allowing it, or what are the rules surrounding this. So I'm spending a lot of time now talking with servicers and asking them what their policies are. For example, one of the largest servicers for VA assumptions in the country is a company called Freedom Mortgage. I'm going to highlight Freedom Mortgage because they're actually doing things right. And I actually have two VA assumable loans under contract right now within my real estate business, assuming a VA loan with my clients with Freedom Mortgage as the servicer. So I'm quite familiar with their product. Now, assuming a mortgage is pretty much the same process for all lenders. What's different between lender and lender, or servicer and servicer, is how they assess or whether they are willing to allow a second mortgage to be taken out. With Freedom Mortgage, and I spoke about this with them yesterday, they will allow second mortgages to be initiated at the time a contract gets submitted for an assumption. So when that buyer submits that loan application to assume a home, assuming it's VA, I know for sure, but there's no limitations on it for FHA as well. So VA, FHA, same process. As long as the borrower is financially qualified and meets the underwriting guidelines for the debt to income ratios for that VA or FHA loan, as long as their combined debt to income ratios for the second mortgage payment plus the first mortgage payment, they're qualified to meet that mortgage payment, there is no limit. They actually will allow up to 100% loan to value on a second mortgage. I don't think there's any lenders that will do that, but they don't take into consideration that original appraised value, which was initially what was perceived as being the roadblock to second mortgages.
Okay, so that was kind of my question. If I'm assuming a VA loan, we talked about this last time, I'm assuming a VA loan, I don't have to be a VA, right? Now, I'm a VA and I want to get a second mortgage and I want 100% there. You're saying that's not possible right now?
So there's no way, unlike a new VA loan, we all know when a borrower takes out a new VA loan, they are able to do 100% financing. Lenders will allow up to 100% financing because that's guaranteed by the VA, Department of Veteran Affairs. So, so zero down payments, perfectly acceptable for a new loan. When it comes to assuming a mortgage, generally speaking, without a second mortgage, there's that cash gap that has to be covered. With second mortgages, that cash gap is significantly minimized. Now, it's really up to the lender who's issuing that second mortgage to set the parameters for what is allowed. And I know with David's bank, they authorize up to a 95% loan to value. So basically, you take 95% of the purchase price can be borrowed, some portion of the first loan, the remaining difference out of the second mortgage. What that does then require is that borrower still needs to have a minimum of 5% down payment. There are not many lenders who authorize second mortgages to begin with, or issue them. And there are fewer that do second mortgages up to 95%. Many cases, a lot of lenders will require 10% down. So they'll do a 90% loan to value. With David and his bank, he authorizes up to 95%. So really minimizes the amount of cash that borrower needs to come up with to assume that loan.
Yeah. Well, okay. Yeah. Let me break down. So you want me to break down like what those type of loans are for the second mortgages? All right, cool. Please. So there's really two categories of second mortgages. There's going to be HELOCs, which is a home equity line of credit. You guys are familiar with them. Normally you have a draw period where you can take money in and out, and then it turns into like a fixed rate for the remainder of the term. The other type of loan you can get on these is a fixed second mortgage called a HE loan. Now, the minimum amount for these loans is $25,000 up to $500,000, which is pretty significant. But there at some point, assuming a first and a second, the blended rate might make more sense to actually purchase at current market rates. But everyone's financial situation is going to be a little bit different. The cool part about these, there's no prepay. So if you want to pay them off early, you can do so. And depending on where you're buying, you don't always need an appraisal. We can do an AVM. So we might not even need to get an additional appraisal to be able to qualify them. Now, the big difference, though, when people think like, oh, if I am a veteran purchasing a property with a VA loan or an FHA client, these second mortgages do go off the parameters of a typical conventional transaction, right? Because if you've ever done a VA loan, they're awesome, but they are extremely loose on what, I mean, you could do 70% DTI on a VA loan. Okay. That's how loose they are. But on these second products, they definitely have to be well qualified to be able to take advantage of it. And it also applies to certain type of properties, which is going to be single family homes, planned unit developments like a subdivision, modular homes, condos, and 1 to 4 units. So that definitely opens it up to be able to assume properties pretty much across the country.
I like that, man. You know what you should do? You should do a YouTube video on the difference between HELOCs and HELOANs.
I think that's a good idea.
That's a great idea, dude. I was like, I'm paying attention. I'm like, oh, okay, notes. I like that. Here's a question from someone. I found the mortgage companies won't allow for the transfer of assumable loans. What happens if that's the assumption that some people have? How do you break through that?
Yeah, I'll cover that one. So when it comes to VA loans in particular, the Department of Veteran Affairs actually mandates that servicers must allow assumptions to occur. It is a guaranteed benefit of the veteran. It is an entitlement, a government entitlement that loan is allowed to be assumed. So the servicer actually does not have a choice. They don't get to decide whether or not they're assuming loans or sorry, we're not processing assumptions these days because we're busy. That is not the answer. They do not get a choice. VA loans have to be assumed, and servicers must comply with the request of the veteran, whether it's the buyer or the seller, to allow that loan to be assumed. So whatever servicer is stating that they're not processing veteran or VA assumptions, that's a very quick phone call to your regional VA office, and that will be rectified very quickly. By law, all VA loans are allowed to be assumed. In fact, every buyer signs a rider in their closing documents when they take out a new loan that guarantees that as a benefit to the veteran. So servicers must comply with that request. When a veteran requests to assume a loan, it has to be adhered to. Now, what servicers are allowed to do is review the borrower's financial guideline or financial report to ensure that the borrower meets the financial underwriting guidelines. So the only way a VA loan doesn't have to be approved is if the borrower doesn't meet the financial requirements. Maybe they have too low of a credit score. They don't have certain income requirements to meet, for that mortgage payment. I'll let David jump in to clarify, but as long as the borrower meets the financial requirements, the fact that they're requesting an assumption has to be processed and theoretically approved by that servicer.
Yeah, let me jump into that because that's a very important piece to this. When we're working together, like Mike, we're working with assumable clients. It's extremely important to get a regular pre-approval. Okay, and I'm going to break down like how we do them because they are a little bit different. So when we do a pre-approval for a client, let's say if they're a non-veteran, just a conventional buyer, we'll pre-approve them on a conventional basis because it has one set of criteria. We'll pre-approve them on an FHA loan if they were to assume an FHA loan or a VA loan based on those specific government agencies' underwriting criteria. And then we'll also match them up with a potential second mortgage on how that would look within that space. So it's kind of like a one-stop shop. With one credit report, we can review the whole situation. And we've done a lot of these pre-approvals, and people are like, you know what, I'm gonna do the assumable mortgage. Can you just make sure that I can get the assumable loan? Multiple times, lenders have denied the clients from assuming the mortgage. We'll provide the documentation from the agencies with their guidelines, and then they actually end up reapproving it and closing. So it's a powerful tool because, you know, Mike mentioned, is that servicers sometimes will have overlays to what the VA allows, right? VA doesn't have a minimum credit score. Well, the servicers are going to have something in place. They sometimes may not understand the state that you're buying in. Like, it might be a high balance state where, you know, if you have multiple VA loans, you still have enough entitlement to purchase in there. It's been like these small little nuances that get either people disqualified, that they're not working with a lender that has, their best interest to be like, hey, can they buy? Let's figure out how they can do it. They're just like, well, this isn't going to fit our box. Let's deny it. And then what do you do from there? You know what I'm saying? Like, yeah.
And there's a question, Tristan. Somebody asked, are all VA, FHA, and USDA loans assumable? Yes. So yes, all of those loans, all government-backed loans are assumable. Servicers must comply with the request to assume those loans. The difference between them, particularly with the VA, there's an entitlement component question, whether they're going to use the borrower or the buyer's entitlement, or the seller's going to leave their entitlement. That is only applicable with VA. And then the other nuance with the three is the processing timeline. Generally speaking, VA assumptions will be the quickest right now. The VA did issue a mandate. They call it a circular that directs all VA assumptions must be approved within 45 days. There's no exception to that. It's not necessarily 45 days from the date of contract ratification. It's 45 days from when the borrower submits their loan application to the servicer to begin the processing of that assumption. There is no specific deadline or timeline for FHA or USDA that I know of. However, with regard to FHA assumptions, just about a week and a half ago, HUD, which manages the FHA program, did authorize an increase in the fees that servicers are allowed to charge to process that assumption. So it used to be, for FHA, the maximum amount of fees that a servicer can charge for an assumption is $900. That has been doubled to $1,800, which is intended to improve the speed and the timelines with which those servicers are processing them, because it gives them more money to hire more staff. More staff gets them through the backlog and process these assumptions more quickly. So that is intended to improve the speed. VA, they have mandate, must be done within 45 days. And in fact, also about a week and a half ago, the VA approved what's called a locality variance. In addition to the $300 servicing or processing fee for VA assumptions, there is now a locality variance that the VA is authorizing servicers to charge, roughly about $400. It changes based on a couple dollars here or there, based on East Coast, West Coast, South, Northeast, the quadrant in the US. But generally speaking, there's an additional $400, so about $700 that servicers can now charge for a VA assumption, again, to help improve the speed and the timelines with which they can process these and get them through the system. There's now what's called a greater incentive for servicers to process assumptions.
I put up Dave's last video on Dave, you may want breaking news: veterans can now pay realtors fees with VA loans, just so people can watch that one. Really quick, before I go to you, Dave, I've got some specific questions. I want to showcase AssumeList really fast, because I know some of you don't know what it can do. In fact, I don't know that a lot of you even know we can search for assumable loans on their site. Here's where we would go. I'm going to just use Thousand Oaks because I know you're in California and that's not too far for me. If I click Thousand Oaks, what happens is all of these start popping up, and you see these are green is active, blue's coming soon, red is pending or under contract. And I can go through them and take a look. Let me zoom out here. Let's see if I can get a wider area. And now you've got this one, says it's an open house. All of these that are active are assumable loans. And that I've never seen that anywhere so easy to use. Mike, this is your project. This is your thing, dude. What do you think when you see this, man?
Well, this is exciting, right? So obviously this was about 2 years in the making to build this product. We are getting a significant amount of interest, certainly queries coming in faster than we can manage them. And we're hiring staff to help improve the response times and getting questions answered. Of course, there's a lot of education that goes with offering a product like this, right? How do the rules work? What's the timelines? Can you connect me with an agent who specializes that understands how assumable mortgages work, right? So all of those things are what we offer, how we differentiate what AssumeList does versus, say what a Realtor.com or a Zillow does. Those that are familiar, Realtor.com does have a tick box in their search profile and the pricing page. What they don't do is they don't differentiate which homes have, say, a assumable mortgage with a 6.5% rate, which you wouldn't really bother with that because you can take out a new VA loan today for about 6.25 or 6.375 as of the date of this webinar. So what AssumeList does is we have already done all the filtering for you. Every home on our website, if it has an assumable mortgage, will have a loan interest rate of less than 5%. So every property, whether it's actively listed, agents also get access to off-market homes, and they can use this to market and generate leads from and do some creative social media marketing. Maybe we can do another demo next time, Chris, and I can show you some of the newer products and tools that we offer now. And every home on our website has an interest rate of less than 5%.
I love that. All right, Dave, going back to you. When we're looking at getting this second loan, what's the process like? How long does it take? Because I also keep on hearing, man, this is taking 90 days plus, and that's a little scary for a lot of people.
It definitely is. So there's two different components to it, right? There's the assumable portion with working with the servicer. That's going to take the longest time because to actually, once you go under contract to get the second mortgage rolling, that is a pretty quick process. Within 3 weeks, 2-3 weeks, you're going to be basically done. Especially if you can get like an AVM where we don't need to get an appraisal done, it'll just move right through the pipeline. But once those terms are put together on the second mortgage, then the servicer is going to want to review those to make sure that the client qualifies for that product, combining those two different payments, right? That's like a big piece of it. And then the title company, when you get to closing, needs to have a second mortgage also in place there for title. So, but the process wouldn't take longer than the actual assumption process with the servicer.
Okay.
Yeah, because when they do the pre-approval, like from our end, it's pretty simple. I mean, it's 24 to 48 hours. If they're doing a second mortgage, just to put the whole application together and they're out the door being able to purchase a property. But like Mike mentioned, it's a lot of it is with the servicer. So you have to do that legwork up front by contacting the servicer, making sure that you can get the second mortgage. Because we've been in positions where we've went under contract, got the second mortgage, and then the servicer said that they don't allow
it. Yeah, that's no good. Let's go to some questions. Does David process second mortgages in Georgia?
Yes.
Georgia. Okay,
all 50 states, right, David? Just get that out there. You are licensed in all 50 states.
Yeah, we're licensed in all 50 states. The assumption product does actually change based on state. Some states allow you to do HELOCs. Some states only allow you to do HE loans. And then you have Texas, which, they don't allow you to do cash out. So they do limit you on what loan to value you can go up to. But that's more of the state restrictions and what the states don't allow. That's an important factor.
Got it. And how do people get a hold of you if they have questions about this, man? Is there an email that they would use, a main number? Well, how do you want people to contact you?
Yeah, my email is David at, I'll put it in the chat, but it's David at watermanbank.com.
Awesome. All right, we've got.
And then also, if they get a hold of Mike, he's in my speed dial and I'm in his speed dial. So if they reach out, and also we're gonna, we can do presentations for real estate groups. If especially like that's going to be kind of leading up into that AssumeList Academy, right? Not just providing this info, but then just, doing more one-on-one calls with people, explaining the process, going through all that.
All right, so you took my thunder, Tristan. I think the very next question was, do we offer courses to train agents on becoming knowledgeable and how assumable mortgages work? The answer is yes. We will absolutely be offering a course. We're going to be calling it AssumeList Academy. It'll be available to folks on our website. And that is really the partnership, again, with AssumeList and David with Waterman Bank to train and educate agents. I would love for this to become its own NAR certification course. It looks like we just lost Tristan. Hopefully Tristan's able to come back. We just lost Tristan from the webinar. So we'll host ourselves. Yeah, so we are offering a training program called AssumeList Academy. It will be available in approximately, I'm going to say within the next 30 days. So hopefully within the next, probably 3-4 weeks, we're getting all the content built out and getting all the web integration built into the AssumeList.com website. And so that users will be able to access all of the training content materials. And then, of course, as David mentioned, we will also make ourselves available for if there's brokerages or teams that are interested in doing some of a more broad training, obviously more than just a one-on-one session. If there is more of a team kind of environment where we can get in front of a lot of folks and help educate the process, by all means, that is exactly what we're building out AssumeList Academy to do.
That's awesome. Yeah, I'm excited for it because it's just a lot of good info like what we're talking about today, but we get really granular on the different aspects of the mortgages. Because a lot of times too, I would feel that more in an assumption process, agents do really need to know a lot more about lending, because if you're not working with a loan officer, you're working with a servicer. You don't have just someone you can call on the cell phone and be like, hey, can you walk me through how this works? Right? It's a whole process. So you do have to learn a lot more. And that's what we want to provide people to kind of take away that frustration and actually streamline that process, empower you to get more deals. And then also, how do you present those deals when you get them? Right? Because sometimes sending an email with, here's the contract, let me know if you have any questions, may not be the right thing. You might have to communicate a bit more, explain in the offer what is actually being conveyed, and having a lender partner reach out that's not even on the transaction but did the pre-approval, just to instill confidence that this is something that can be done.
So that's a great point, David. So I just want to highlight something real quick to all the agents out there on the call. Most lenders, many of us have existing lender partners. Most lenders that you are currently partnered with will not offer a second mortgage. It is not a common product for lenders to offer a second mortgage. In fact, of all my lender partners in my 15 years in this industry, there's only one that I regularly work with that offers second mortgage, and that's David. All my other existing lender partners do not do second mortgages. It's not something that they offer. So keep that in mind. Certainly call around, talk to the lenders you work with, which is why, I did my homework when David and I first connected. We walked through all the different types of products that were potentially can be built around assuming mortgages and having second loans available. And so this is kind of a unique relationship. Again, not all lenders are able to offer second products. The second thing that you will find as you become smarter with assumable mortgages is you will likely be the expert in the room with regard to a transaction. So when you submit, if you're representing a buyer and you're submitting an offer to assume that loan, don't be surprised if that listing agent has no clue that the home that they just listed for sale has an assumable mortgage. You may be the first one to inform them that in fact is the case, which is often the case with me. I've got 3 homes under contract right now today. 2 out of those 3 listing agents didn't even know that their home had an assumable mortgage. So I had to walk them through the process. And also because of my knowledge about this, I also take the lead in all the processing, third party. You want to fill out the third-party authorization forms so that you can call on behalf of your client and ask questions to the lender. So there's some kind of tips and tricks along the way to really get smart on how the process works. And by becoming that expert, by having that capability and having those conversations with your clients, you truly become a really value-added proposition. You offer something that no other agent or very, very few agents are able to offer. And that is really a way to circumvent the high interest rates. I mean, who doesn't have a buyer right now that wouldn't love to take out a mortgage at 2.5%? I mean, every buyer that I came across would love a 2.5% interest rate. Well, I can offer that to them. And most people come to me saying, hey, Mike, I heard you know a lot about assumable mortgages. I found this article online. Can you tell me more about it? And the agents that can't answer those questions are losing business. They don't have the ability to differentiate themselves in this transitioning world where buyers agents, it may become more common for buyers agents to have to charge their clients, right? Commissions are now being restructuring and the way the rules work. We have, this really gives you, assumable mortgage is becoming an expert in this field, really gives you an opportunity to differentiate yourself from other agents in the industry. Tristan, back to you.
Thanks, man. My computer couldn't handle the awesomeness, so it decided to just shut off. It's like, I can't handle this. I need to reboot. I wanted to show one more thing here that I didn't get to because I logged in while that happened into AssumeList. And I just wanted to, let's see, active under contract. Let's go to one that's active. Let's go to this
Right
one.
there, top right. Yep.
And now that I'm logged in, what happens is there's just a little bit more information right here. You see, it gives you the loan type and then the loan balance and then the interest rate. That's so important because you can go through this super fast and say, got it, I understand what this is. And then you become more valuable to your clients.
And you notice this one has a pretty substantial down payment requirement. And that's because if you look at the purchase date, they bought that home 14 years ago. So 2012, looks like March of 2012 on the purchase date. So 14 years of appreciation is a pretty lengthy period of time. Probably be pretty difficult to assume that loan. So if you go back to the map, Tristan, what you can do is first you can do status, hit the status drop down and just do active on the top there, the status. Yep, right there where the cursor is. Go right.
My right.
Yep, right there. Active. Now active. And now we're only seeing active properties. And then under the price drop down, you can set a filter based on the down payment. So you do a down payment requirement of, I don't know, whatever you think a reasonable down payment would be for Thousand Oaks. And boom, now you selected 150,000 or 200,000 down. So now it's only showing properties that meet that criteria. So go ahead and click on one of those, any one of those properties.
Let's do this
because one of the things that I wanted to show you is that there's actually more information available. And this one actually includes the mortgage payment. So not only do we have, it's an FHA loan, we have a $94,000 down on a $945,000 listed home, but it has a roughly remember I said there's a cap of 5%. So this one has a 4.99, which if you look at the date it was purchased, July of 2022, that was the last month before interest rates peaked over 5%. So we captured that in our database. This is a great home, assumable home. It's got a sub 5% interest rate. The down payment requirement is quite low, and it shows a mortgage payment there of about $5,300 a month. If someone were to take out a new mortgage for this property, I'm guessing it's going to be somewhere about $7,000, $7,500 a month, somewhere in that range. For every 1% change in interest rate is a 10% change in mortgage payment. So the difference between a 4% loan and a 7% is roughly a 30% reduction in their mortgage payment. So keep that in mind. So when you see these 2.5 or 2.75% interest rates compared to, right now, whatever interest rates are of the day, 6.75-ish. I mean, we're talking about a 40% reduction in their mortgage payment, almost cut in half.
Yeah, it's pretty significant. And if we have a couple of minutes, I'll touch on. There's definitely alternative down payments. So a lot of people I talk to actually end up not getting a second mortgage because they didn't realize they actually had the cash. And that comes in a couple different forms. A lot of times people have a hefty 401k and they can actually liquidate a part of that for a down payment. And so when you look at all the numbers, they're like, wait a second, I actually do have the money. I can withdraw it because I'm purchasing a primary residence. That's one. Now, the other big one is that right now, over the next 20 to 30 years, we're going to have the largest transfer of wealth in the history, right? Because baby boomers are passing away. So what I've also seen is people get early inheritances to actually do these down payments so they can get very affordable mortgages. So that's something new that I've actually noticed with folks. So there could be an ask that sometimes people don't realize. Hey, I had a buddy of mine do that. It was, yeah.
Guys, can you both put in your information, emails? Because I've got quite a few people asking. This way they can reach out to you either to do a presentation for their office or to ask more questions. And then we did put up a link there for AssumeList. If we can drop it in again, that we have all that information. Mike, this is really good. Dave, this is pretty awesome, man. I feel like we're just not going to get enough of this over the next few months. I don't think it's going to get easier. And
no, it won't. I got two-party comments. I know we're winding down, Tristan. One, AssumeList is launching in Georgia, North Carolina, and Texas within the next 2 to 3 weeks. We're going to start with Texas. I think we're first going to be in San Antonio, and then to Austin, and then Houston, all within the next probably 30 to 45 days. Charlotte, we're going to go with Charlotte, and then expanding into Atlanta as well, all within the next 30 days as well. So we're going to be expanding into new markets. And then finally, I wanted to point out that the VA issued a new circular yesterday, starting August 10th, because of, in light of the lawsuit and the fact that this new MLS rule that will now prohibit sellers from advertising a commission in the MLS. The VA has what quote unquote temporarily lifted the restriction from veterans being allowed to pay for their own agent's compensation. So first time in the history that I'm aware of, the VA departments, the VA program. So up until now, veterans and anybody using a VA loan is prohibited from paying their own brokerage compensation. You couldn't pay for your own agent's commission. Starting August 10th, that restriction will be removed, and veterans will be allowed to compensate their agents directly. Not necessarily tied to assumable mortgages, but I thought I'd point that out since we're talking a lot about VA loans today.
yeah, I like that. Anything else, guys? Dave?
No, I think it's good. Thanks for having me on. Yeah, if you guys have any questions, shoot me an email. I'll get back to you ASAP, and hopefully we'll be on again soon.
Yeah, we will. Mike, thanks, man. Appreciate you. Everyone, check out AssumeList.
Thank you.
Thank you.